Hello, my name is Mike Smith and I'm the president and founder of T&K Futures and Options Incorporated. And what we're doing today is part 3 of our comparison between stock options and commodity options. But before we get started, let's go ahead and cover the risk. Futures and options investing carries significant risk of loss and is not suitable for some investors. Past performance is not indicative of future results, and you should only use risk capital for these types of investments. Okay, I've been doing this now for 20 years and I hear a lot of questions about options and the difference between the two. A lot of people are familiar with stocks. For whatever reason, stock options seem to be becoming more and more popular. I don't know if people are just writing covered calls against the stocks they own to have more income or whatever it is, but people seem to know a lot about stock options and very little about commodity options. And I just want to explain these a little bit better and compare the two. So, one of the main differences, and I think this is an extremely important difference too, is the difference in correlations to each other. So, stocks in general have an extremely high correlation to each other. So for instance, let's say you have a portfolio set up and it's got biotechs, healthcare, technology, consumer staples. You have 10 different sectors, let's say, of the stock market. And let's say you have 3 stocks in each sector. So you have 30 stocks total. Well, let me ask you, if the Standard & Poor's Index or the Dow Jones, let's say they're down 20%. How many of these stocks in your portfolio would be up? Chances are none, right? At best, maybe 1 or 2. So the bottom line is, if the stock market is going up, chances are all of your 30 stocks are up as well. Maybe 1 or 2 are laggards, maybe. Chances are, if the stock market is selling off or correcting, most of your stocks are down again. Maybe 1 or 2 isn't. So there's an extremely high correlation between stocks and whatever the actual index is doing. So as an asset class, they are extremely correlated to each other. Now this is not the case with commodities. Commodities has a very low correlation to each other. Let's go ahead and put up another hypothetical portfolio here. Let's say you have energies, precious metals, grains, and softs. Let's say in the energies you have crude oil and natural gas. Let's say your precious metals, you have gold and silver. And let's say grains, you have wheat and soybeans. And let's say softs, you have coffee and cotton. Okay, well, cotton doesn't care what coffee's doing. Coffee could be going like this and cotton could be going exactly the opposite direction. Commodities care about supply and demand. So it's going to be different depending on what the commodity is, what that supply and what that demand is going to be. For instance, in the grains, soybeans could be going straight up and wheat could be going straight down, or vice versa. They're just not very highly correlated to each other. Gold and silver, they're kind of correlated to each other, sometimes more, less, sometimes more, but they can go opposite directions as well. Energies, natural gas, and crude oil, for instance, they can be going opposite directions as well. So in other words, these 8 commodities that you have in here are less correlated to each other than all 30 of these stocks you had over here. And not only is there a lack of correlation amongst themselves, there's a lack of correlation to traditional investments. So in other words, you could have a stock market is crashing and that have no effect on your commodity trades. You know, you might be buying or selling options, going long or short futures, whatever it is you're doing. So, you know, having these non-correlated assets, well, they go in the group of alternative assets, is what futures and options are included in. So adding alternative assets like futures and options to a traditional stock portfolio actually can give you true diversification. So again, Not only are they not correlated to each other, they are not correlated in general as an asset class to your stocks. I think you can see the advantages or potential advantages there as far as adding the commodity options to your traditional portfolio. I know that's confusing, but a lot of people don't understand this, and they just kind of write off commodity options as something they don't want to learn about. It's too foreign or too new, but it might warrant some attention. If you have any questions, you can go ahead and give me a call. My contact information is at tkfutures.com. I also wrote a book called The No Nonsense Guide to Buying and Selling Options. It's all about commodity options, not stock options. You can get that on Amazon. That might help you as well. But that's it for today. Hope you enjoyed it. Hope you learned something. Have a nice day. Bye-bye.